Hi, I'm Tim Gaspar with Gaspar Insurance. We're an independent insurance agency in Southern California. We have a few offices in other parts of the country. Wanted to take a minute today to talk a little bit about what's going on with the home insurance marketplace in California. Making this video because just a couple days ago, there was big news that came from State Farm where they've said that they're going to stop selling new home insurance policies in the entire state of California. Now, this is big news because State Farm is actually the largest provider of home insurance in California. They're actually the largest provider of personal insurance like auto and home in the entire country. So when they, within a state like California, which has a massive population, is a pretty significant percentage of their business, for them to stop offering new home insurance policies is a big, big deal. So the question is, why would they do that? How could that possibly make sense, especially with all the, the negative PR that they're getting this week from news organizations and newspapers and all sorts of places. And so I wanted to list a few of the reasons that this is happening. So first and foremost is just the events that we're seeing within the state when it comes to wildfires, when it comes to floods, the torrential downpour of rain that we saw this year in 2023. These have been really expensive for insurance companies. In 2017 and 2018 alone, with the big wildfires, both of those years, insurance companies spent about twice what they took in premiums that year on claims. And so an experience like that will definitely leave an emotional scar when you're a business. And so they want to be really careful not to be overexposed if that were to happen again. In addition to that, there's a significant issue with inflation. And so everybody's experiencing inflation. If you go get some Lucky Charms, this week they're going to be maybe 20% more than they would have been a year ago, and the box is smaller. And I happen to notice personally, I think there might be less marshmallows, but that's a whole other story. But with home construction specifically, this year in 2023 compared to a year ago, you're looking at costs being about 20% more to do construction on a home. So that's wood, nails, appliances. And the same thing was true, probably another 20% between 2022 and 2021. So a home insurance claim that might have been $100,000 for an insurance company a few years ago, this year could easily be $150,000 for the same exact materials and the same labor. Now, that's a really important point because insurance companies are generally collecting the same amount of premium that they were collecting 2 years ago. So if 2 years ago, a policy might have been profitable for an insurance company, this year it might not be. And that's because in the insurance world, their rates are regulated by the California Department of Insurance. So if an insurance company, like State Farm in this case, wants to actually increase their rates, the Department of Insurance has to give their blessing on that. They have to give the rubber stamp of approval. And right now, and in the past couple of years, that just hasn't been happening. So the department's been very vocal about not wanting to increase rates for consumers. And certainly that makes sense. We want to protect consumers. We don't want folks paying more for insurance. And there's definitely a good thinking in regards to that. The challenge is that if you tell every insurance company that they all have to leave the rates the way they are when they're experiencing inflation and an environment that's just very difficult from a natural disaster standpoint, insurance companies that don't raise rates and start losing money, they'll just leave. And so a few years ago, AIG left the marketplace. That wasn't as noticeable because AIG Private Client Group primarily was insuring really high net worth individuals. And so it just didn't, make most of the news channels and wasn't as big a deal to most folks. State Farm leaving is a different story. And what we're going to see in the future, unless we really work hard to resolve this issue, is we're going to see more insurance companies leave the state, not only for home insurance, but the same thing is happening within the personal auto insurance marketplace. Most drivers within the state of California are going to have an increase this year of 20 to 25%. These are companies that have actually started getting rate approvals because they actually threatened to leave the state, and the Department of Insurance was more proactive with those. So big challenges in the state in regards to insurance for just about everybody, I hate to say it. So the best thing you can do as a consumer is write down the experiences that you're having, whether it be your home insurance or your inability to buy home insurance or whatever it might be, and tell your local legislator about it, because that's who you want to make sure knows about these issues, because the work that needs to be done is going to need to happen up in Sacramento. That's where we're going to make a difference. And remember, if you can't find insurance anywhere else, you have the California Fair Plan, but that is a carrier of last resort. They would tell you themselves the coverage is not amazing. There could be solvency issues in the event of a very large scale issue, but it's certainly better to have the California Fair Plan than no insurance at all. And so I apologize, not the most upbeat video, but hopefully you now have a little bit of background as to what the challenges have been for our state. Thank you so much.